G'day folks, welcome back to another update for natural gas. Now the charts have turned bullish on the daily at least. We're going to include some back testing as well. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos. I did one about a week ago which demonstrated these strategies, and today we're going to demonstrate as well in the current charts with the CCI 14 and also the CCI 350 strategies for natural gas. In terms of the outlook, short-term bearish pressure due to high supply and full storage. Record US production and both US and European storage levels are currently ample. These factors combined with milder weather forecasts have pushed prices lower. In terms of the geopolitical outlook, the fundamentals are currently bearish. Geopolitical risks remain a major upside factor. Any disruption to supply routes from ongoing conflicts, particularly in Eastern Europe, could rapidly change the market balance. Even though Europe has diversified its supply with more LNG, any new geopolitical event could cause a price spike due to the market's underlying fragility. So first, looking at the weekly chart, you can see there long term it's still bearish. The price is below the moving averages, but notice the CCI 150 down here is actually broken higher, and that's a bullish momentum indicator. Hasn't actually broken higher than the moving average of the price, and that's what I want to see, that break higher. But also as well, I want to see the moving averages start bending and widening apart like they were back here. So when that happens on the current weekly chart, when the price breaks higher and the moving averages start bending up and the CCI is also above, then we're going to consider that a bullish momentum. But at the moment, mostly bearish at the moment with the price below the moving averages. On the daily, however, it's already broken above the moving average band, so you can trade on the hourly if you're trading in the direction of the daily. And what I've done here was going long from this period when the price, ideally that should be probably around on that candle there, when the price breaks above the moving average, but so is the CCI. And you would have closed out at the very latest on the hourly if you're trading, and I'll go to the back test in a minute. At the very latest, you should have closed that out on that candle there when the CCI broke into the moving average range. But I'll show you the back test and the hourly in a second. So at the moment, bullish momentum, and you would have been going short from this period back here again. On the hourly, what we look for as well, before we go to the back test, we look for any divergence, and that's going to help us decide should we close out any trades before the daily gives us an indication to close. Now back here before our last video, we did have a bearish divergence. We drew a target, and before our last video, it broke into that range. You can see there it broke just below it, and it's bounced out of there. Now at the moment, there's no divergence that I can see, so that's the CCI is moving in line with the price. So looking at the back test now, looking at the daily here in direction of the daily, going long. These are the 1 hour charts, and this is the CCI 14 and this is the CCI 350. Again, reference the +1 videos to get a deeper dive into how to trade this strategy. But looking at this going long here during that period, you would have let it go. Now you would have avoided this drawdown on the CCI 14. So even though the price is above the moving average, you would have avoided that drawdown, because why? At the very latest, you should have closed it out around that point there, and you might have had a couple of positions open there, still within a profit, and you would have avoided that drawdown. But notice as well on the 1 hour chart, there was a bearish divergence. I've marked the price here. I haven't got the CCI 350 here, but I've marked the price, and that's why you always reference the CCI 150 as well on the 1 hour chart I just showed you a minute ago, and that would have indicated a break to the downside, and you would have closed it out possibly earlier than the daily shows there. On the CCI 350 here, a similar sort of pattern happens. You would have gone in with a trade there. Now this one you would have closed it out when the CCI 350, you see that it closed and opened a few times, and finally closed it without opening any trades when the CCI 350 started bending to the downside. And then it finally opened another one there, and you're currently still in a trade with this one. Overall, the 350 strategies generated about 13,800, and the 14 strategies generated about 15,300 so far. So for BOIL on the weekly, it's a bit hard to see here on the weekly chart, but the price is actually broken below the moving averages, and so is the CCI 150 down here on the weekly. So it's bearish momentum on the weekly chart. On the daily, again, you can see there it was bearish as well on the daily chart, both the price and the CCI. Until our last video, we did see a bullish divergence. Now we drew a target range there, and that's currently broken up through that moving average range on the price, but also the CCI as well. So bullish momentum on the daily, so you take long trades only on the 1 hour time frame of the intraday. Now that looks like it's going to start taking approaching that target area, and that's a 23-38% Fibonacci range, so that's still in play. And on the hourly, look for any micro moves. What we're looking for here, again, we've got another, before our last, we had another bullish divergence. They came up, just kissed that 23-38% target range, and it's retraced to the downside, and it's finally broken up above moving averages. So at the moment on the hourly, you'd be taking long trades in accordance with the daily. From that period, from that candle onwards, you would have taken long trades, and you'd still be in the money with that one. For UNG on the weekly, again, that's also bearish. Although I notice the CCI 150 is broken into that moving average range. So if you're trading on the daily, short, close out your trades at the moment with that break into that CCI range to maximize your profits from that decline on the price. On the daily, if you're trading on the 1 hour, you would have shifted to long positions here based on the daily trend. You can see there that broke into that CCI range, and you would have probably had a small loss on that one. That dropped off quite quickly and hit that moving average range. Now, the other thing I want to mention again with these moving averages, I'd like to see them spread apart like they were here, and that's confirmation at this point back here, for example, and that period on the CCI, that's nice bearish momentum. When you see a consolidation of the moving averages like that, that's a consolidation of the price as well. So just be cautious. This could go either way, but at the moment the CCI is showing bullish moves, so we might see a further move to the upside. There was another consolidation back here. You can see there is undecided until it sort of went down, then up, and then finally broke to the downside. So just be careful of these consolidations on the moving averages. So at the moment, bullish momentum on the daily. On the hourly, again, based on the daily, you would have taken a long position from that candle on, and you'll still be in the trade with that one and close it out in the next couple of hours if that breaks into that CCI moving average range. For KOLD, on the weekly, that's bullish above the moving average of the price. And again, if you're going long on the daily, you'd be closing out your positions based on the weekly touching that CCI 150. On the daily trend, again, it was predominantly bullish back here during that period, and you would have closed it out when that CCI broke into that range for our last video. It dropped off. Now again, notice here there was a false break below the moving average of the price, even though the CCI is showing a bearish momentum as well. But notice these moving averages, and that's why I like to see a band of moving averages rather than one single moving average. I'd like to see that band expand, like back here, for example, when both the CCI and the price were expanding on the moving averages. That's a continuation of a bullish trend. Back here, for example, there was a lot of consolidation. So you may want to sit it out and wait for a final move one way or the other to be more confident of taking a trade. At the moment as well, there's no divergence. That CCI is moving in line with the price. So it's a bearish momentum here. If you're trading on the hourly, you take short trades only. On the hourly, again, the latest you would have taken a short position from that candle there, maybe even that one. You're breaking to the downside, and there's no divergence to worry about. And we had a last divergence we had was this bearish divergence back here before our last video. If you enjoy the content, subscribe at less than a free trial to my Patreon page where I publish weekly bullish shares across regions of the world's markets. Hit that like and subscribe button. Thanks for watching, and see you in our next video.